Alphabet reported fiscal year 2023 first quarter earnings results that really pleased stock market investors. Alphabet stock was up 5% after the announcement of its latest earnings results. So I'm going to go through the big picture items of these earnings and see what investors liked so much about the results. And I'll also answer if it's too late to buy Alphabet stock. If you remember, I recommended Alphabet stock as one of my top stocks to buy for 2023. I recommended this stock in January, and I've been recommending it ever since then as well. In fact, one of my viewers, I remember, made a comment saying, "Hey, okay, all you ever talk about nowadays is to buy Alphabet stock," and it was partly true because it was one of the companies I really liked, and I didn't want my viewers to miss out on this stock. Now, if you look at Alphabet's performance since the beginning of the year, it's up 17.5% already, and that's not including this pop after the earnings announcement this afternoon. I wouldn't be surprised if the stock is as much as 10% higher tomorrow morning. Now, of course, that's going to depend on what's said in the earnings call and what's said as far as forecasts. So it's a little too soon to celebrate for for Alphabet stock investors, but already the company's done really well for this year. And looking at this quarter's results, revenue increased by 3% to 69.8 billion in the quarter ended on March 31st. Normally, these pedestrian results would not be good news for a company like Alphabet, but the expectations have been lowered so much that revenue growth of 3% actually was good news. It was better than what Wall Street was expecting. Earnings per share fell to $1.17 compared to $1.23 compared to last year, although there are a lot of items that make these results non-comparable, so I'll kind of brush over that. Google search revenue increased to 40.4 billion, up from 39.6 billion in the same quarter last year. YouTube ad revenue fell to 6.7 billion compared to 6.9 billion in the same quarter last year. Google Cloud revenue jumped to 7.4 billion, up from 5.8 billion, and this segment was profitable for the first time in the company's history. So Google Cloud has grown to reach a scale that has finally made this segment profitable. And there is room to go here if you compare with Amazon's cloud segment. Amazon's cloud segment is generating operating profit margins of around 30%. So Google Cloud is nowhere near that, but if you look at that as, a comparison, that could be where Google Cloud gets to or approaches in terms of operating profit margin. Maybe not as much revenue, but maybe the operating margin. Here's one thing I was not too happy with, but I was kind of expecting. Total employees 190,000. This didn't include the reduction in force actions the company took part in 2023. Um, but let me point your attention down here to where they say this is a quote from their earnings release. In January 2023, we announced a reduction of our workforce, and as a result of the first quarter, we recorded employee severance and related charges of $2 billion. I've been talking about this for several months now before this number actually came out because I'd been hearing and I'd been seeing memos from the company suggesting that they were offering these employees that they laid off robust severance packages to the point where I was like, why even fire these people if you're going to give them such robust packages like 9 months of 80% of the salary they were earning, including not including healthcare and other benefits that they're also going to give them. I mean, now it wasn't exactly like that. I'm just recalling, but the package was so robust that I thought to myself, I don't know why they're even laying these people off if they're going to give these kinds of layoff packages. Why not just keep them and stop hiring new people? And of course, every month there's a certain number of employees that quit, a certain number of employees that get poached by your competitors. And so there's natural attrition that goes on where you don't have to pay these types of severance packages to people that leave because they're leaving voluntarily. Why not go that route instead of making this announcement just for announcement's sake and then taking a $2 billion charge to lay these people off? So I wasn't too thrilled about that. As an Alphabet shareholder myself, I do own Alphabet stock. I have owned Alphabet stock for quite some time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So I'm not yet thrilled about the way they're handling their reduction in force. Although I do agree they do need to reduce their staff, their total employee count. I think it's out of control. But the way they're doing it, taking a $2 billion charge, offering these robust packages, I'm not happy with as a shareholder, as a way of using the capital that I've entrusted to the company. On April 19th, the board of directors uh, announced a share repurchase plan of an additional $70 billion. This I am happy with. The company is using its money to go out and buy back its shares. That tells me that management thinks its stock is undervalued, as I do. I think its stock is undervalued. And so they're going out into the market and they're buying back their stock. I think it's an effective use of capital at a time when investments in growth are not popular and investments in growth are not as lucrative on the surface because of elevated costs for labor, for office space, for so many things. Costs are so high. Instead of using that money to go out and try and chase growth, why not use that money and reduce your share count? Because that can have a positive impact on your earnings per share, anyways. So, overall, from these quarters' earnings results, there was a lot to like and there was a lot to dislike. The thing that I dislike most is the heavy cost Alphabet is paying to part ways with some of its staff. I dislike that. I've mentioned that several times. What I did like from the quarter is the increase in share buyback and the profitability of the Google Cloud segment. Now they've got another segment of their business that used to be, sucking up cash and sucking up capital. Now it's going to start throwing off profits. It's going to start throwing off cash flow. So I like that inflection. I'm happy with that as an investor. So to answer the question, is it too late to buy Alphabet stock? The answer is no. I still like Alphabet stock very much. I still think it's an excellent company with a dominant two very dominant business segments in Google search and YouTube, and many up and coming business segments like Google Cloud that could potentially become huge down the line. So I still like the company. I think the valuation is reasonable, and I still think it's not too late to buy Google's Alphabet stock. All right, that's all I've got for this video. Thank you so much for watching. If you appreciated this earnings review, I'm going to have a lot more coming out. I do several videos per day, and I've done so for several months now. So if you like this type of video, this type of stock market research, please go ahead and subscribe. I would really appreciate it. It would really help support the channel. Thank you so much, and I hope I'll see you again soon.